Hello guys, Steven Dexter. Welcome to this new YouTube episode. Today we're going to talk about the definition of adapting into the current market, also the different trading seasons throughout the year. So before I start this video, make sure to click the like button and subscribe. It's going to really help our YouTube channel to give more free content. So have you ever noticed that in different seasons, you see there's perfect criteria lays out everywhere and you're making tons of money and you're on a winning streak. And some seasons, you are currently making a good trade, but the stock didn't really perform the way you expected. Then the few times that you feel like there's consistent trades that does not follow the pattern at all and you're starting on a losing streak, you're losing confidence on trading as well. So these type of trades are all related to different trading seasons. And I'm going to give you the last 5-year statistics to show how to really perform better into different trading seasons. So the first season will starting around November to February. Typically before the end of the year, everybody wants to make a trade before the big holiday. And that's where majority of the trades comes from. Tons of volume, tons of volatility, typically 1 or 2 major squeezes, but generally market is really good if you're patient enough. Then we're heading into January or February. January are typically the month that majority of the company already filed their losses, so they want to raise money in the market as soon as possible to be able to gain the money from the investors in that month. In that way, they will hire a tons of promoters to promote their stocks to be able to sell warrants or do an offering to the investor that doesn't really know about the stock fundamental. So the second season starting around mid-February to June. In those months, the market are really slow. There's about 1 or 2 major trades, but nothing big happening in those couple months. Then after June, we start to transition into an average market. During the average market, we will have about 2 to 3 trades a week. During the transition, that's where majority of the people make their mistakes, and that's where the major supernova comes from. Because if you're not patient enough and everybody is getting used to that boring market season, and all of a sudden they're too eager to get into a trade when the right opportunity decides to come, then that's where they take majority of the losses of the year. So the transition between different market seasons is really important. So when you see a stock is increasing volume significantly, then I suggest you do not touch that one until you see about 1 or 2 trades after you get used to the present market condition. That's how you're supposed to trade. Then we're heading into August to October, which is where we currently are. And we see the market is being really boring. Nothing is really happening. And a lot of people are eager to make a trade. We're right at the transitions right now. If you are impatient and want to make a trade, that's where you are creating opportunity for people who are patient enough to make money from. So as an experienced trader, that's what I suggest, to not really touch between the transition season, and that's very important. I make those major mistakes pretty much all the time. So for the last 2 or 3 years, I started finding the correct statistics and how to really use the correct method to trade into different seasons. So the second point on the cover will be the definition of adapting into the current market. How do you really adapt into the market? People are really asking that question to themselves because they don't really know how to. They're just observing, and depending on what they see, they will start to make corrections on their trades. Now that's very important for beginners and for experienced trader as well, because if you see the last 10 trades that is very boring, and as soon as it opens and start dying in the first 5 minutes, did not produce a bounce as well, if they see that for 10 times, they will likely to place a trade then that doesn't fit their criteria, but they see for the last 10 times it repeated, and all of a sudden everybody will think the same. And when everybody thinks the same, that's where they become 90% of the people that lose money in the market. That's where the stock decides to reverse and squeeze a tons of people, and the original opportunity supernova comes from these type of people are making mistakes. So how to really adapt into the current market? Personally, I have this one method that can really help you to be able to have a clue about how the market is really changing. As I said, if you are noticing for the last 10 trades, if nothing has changed and all of a sudden the volume is significantly increasing, that's where you stop trading and you want to track down your statistics and to be able to track the average volume, because the average volume is supposed to give you an idea of, okay, this is the average volume can be traded in a day. So if I tend to buy a stock and stock is already meeting the average volume in the first 10 minutes, that means the stock is likely to trade much more volume later on. So if I see that and I have this average volume, it is not fitting the current market, then this stock is not going to be tradable. Let me give you an example. So let's say I track for the last 2 months or 3 months. The average volume in the day will be around 20 million to 50 million, right? In the last 2 days, I've seen a ticker that trades about 50 million shares in the first 2 hours. Then I would definitely know, okay, well, today is definitely going to trade over 100 million shares because it already traded 50 million in the first 2 hours. What will happen in the next 5 hours? So for the average volume, if you see a completely change, that's where you stop trading, close down your platform, put all of that statistics in your sheets, and be able to slowly adapt into the current market by tracking the average volume. It should take you about 2 to 3 weeks to get used to the current volume. If you notice of my trading performances in 2020, for the first 3 or 4 months, I'm not making the bigger trade. I'm making 400K in one trade or 300K in one trade, making $1.5 million in 1 month. No, because I'm trying to getting used to the current market conditions. When the market came in 2020, I'm very confused because I don't know what to do with this type of volume. And it will take me time to get used to it. A lot of people will see the volume, but they don't really know how to really trade it. And they will still trade it when they don't know the market. And you're trying to make money for something that you don't really know, then that's where you start lose money. So those are the tips that I can give for how to really adapt into the current market and also be able to prepare in different market seasons. So as I said, we're currently between the transition in the second season. So be patient, don't be the first one making mistakes, and thanks for watching. I will see you guys in the next time.